Welcome back to Fast Market here on the TD Ameritrade Network. Let's bring in our next guest for our cash tag segment, and that's going to be Megan Brantley, Vice President of Research at LikeFolio. Welcome back to the show, Megan.
Thanks for having me, guys. Happy Friday.
Yeah, happy Friday to you. So we're talking fintech. We just covered PayPal in the previous segment. Block's had some issues last month. The Hindenburg Research short report on this company, bunch of accusations. The company came back. What kind of data are you seeing out of LikeFolio, because the stock continues to struggle this year?
Yeah, so a lot of times on Fridays, we come to you guys with some big winners that we're watching, some companies where we're seeing a lot of momentum build or divergence. And this is actually an instance where we're starting to see some warning signs, some red flags whenever we look at just the consumer perspective of Block. And this is a massive name whenever we look at just the different areas that a consumer could engage with Block. It could be a merchant who's using its point of sale or e-commerce services. It could be, one of us sending a cash app, a peer-to-peer payment back and forth to each other. It could be title. It could be it's buy now, pay later, after pay. But across the board, we're starting to see some weakness. And this chart is showing you consumer mentions of either downloading or using one of Block services. And a lot of times this has to do with, a lot of times people are more likely to talk about the first time that they're using something or talk about potentially a negative experience. But in this instance, you can see that growth is really starting to slow down. So the quarter that we have highlighted, that first quarter of this year, ended about 2 weeks ago. So we already have an idea for how we think things are going to shake out. And we saw a massive deceleration in just that momentum, that demand momentum, down by about 20% year over year. And then if you look at quarter two, which is about 2 weeks in, you can see it's actually losing steam. So that momentum is continuing. It's actually now pacing down about 23% year over year. So for us, it's a little bit troubling to see some weakness. We do see that on the Square side of things. So on the business side of things, things look a little bit flat, but then more alarming on the Cash App side of things, which is really where our data is. We have the most insight into. We see a drop off in those engagement mentions and that user growth in that super app. So just something that we're watching moving ahead, especially as companies wrap up that first quarter, that we're starting to see signs of weakness here, especially for a name like Block, especially when it comes to even consumer discretionary spending. So just some warning signs heading into this next round of earnings season.
Megan, with all the bad articles and news that Tom has already mentioned about Block,
yeah,
what really concerns me is what seems to be, their revenues at the end year ending December 31st, about $17.5 billion. That's only slightly lower, but their expenses, Megan, are skyrocketing. How about this? Their overall operating expenses year over year up 53%. The general administration costs up 73%. Other costs up 50%. Their operating cash flow in 2021 was $848 million. Now it's $176 million at the end of 22. Megan, there's a lot of warning signs, not just the article from Hindenburg Research, but the fundamentals of this company seem to be deteriorating, Megan.
Yeah, and what's interesting, I'm glad you brought those things up, because things like operational expenses are not likely to show up in our data. But what we can pay attention to is demand and sentiment, I think, especially. So you'd expect if a company especially is investing in growth, is investing in building its products, expanding its products, improving its products, that you would see some type of improvement in those overall consumer happiness level, right? Maybe the end user has a better experience, but we're not seeing that. Whenever we look at the overall happiness levels of Block, those are sitting around 66% positive. And just to give a frame of reference, when you looked at this company 2 years ago, 3 years ago, that was up close to 80. So that's a really big drop in overall sentiment levels. And this previously was, whenever we looked at our data, this was Block's edge. consumers really liked its product. They offered a superior experience, and that's why a lot of people kept using their product. And now we're starting to see some underperformance versus peers when we look at things in the e-commerce space, when we look at things in the peer-to-peer payment space, even when we look at things in the crypto space, which is an area that, you know, Block really locked itself into. So I think that that's a little bit concerning long term. Whenever we see a drop in sentiment over 10 points, that's pretty significant in our universe, and also a drop in sentiment at a time when we're seeing demand slowing down. So what that's telling us is that we're seeing, you know, a smaller group of these really loyal and really excited consumers that are less happy. So again, just another red flag in our data whenever we see a drop in sentiment, underperforming peers, at the same time that we see a decline in consumer demand.
Yeah, you know, they don't have earnings for a few weeks here, Megan, but I noticed the direct deposit mentions, and that's about 40 to 50% of their profitability for this company. Is that maybe one of the bright spots for this company that could be, you know, maybe the next innovator that can expand their business?
Yeah, you know, I wish that could be the bright spot in this conversation. But unfortunately for us, when we look at this, we actually see direct deposit mentions down. And what's interesting is you can see a lot of these mentions are tied to, you know, they really spike in times of government stimulus. A lot of people opted to have those directly deposited. And it also spikes alongside tax returns. And so this is a really important time for us to kind of look and see, you know, on the consumer front, how's the consumer doing? And we see those down pretty significantly year over year. We also know that I think on average tax returns are supposed to be about 11% lower for consumers this year versus last year. And so in the first quarter, that should be a time when we see an increase in consumer demand for Cash App and for Block, because we see an influx of consumers who are, you know, getting that deposit and then also increase their spending. So for us, this is a sign that maybe these consumers, or these Block consumers, and where our data lands, these Cash App consumers specifically, have a little less spending power. They're feeling a little bit more of those macro pressures and the lagging impacts of inflation. So we have some macro headwinds mounting too.
And, you know, as I mentioned, they don't have earnings for a few weeks. Do you guys have an earnings score on this? Are you still seeing weak numbers according to your data?
Yes, our earnings score right now is a negative 47, which in our world, that's pretty bearish. To give frame of reference, I know you guys talked PayPal in the last block, and our score is pretty neutral there. So a little bit of a divergence in what's often compared, a peer that's often compared to them to have, you know, Block pretty bearish at negative 47 versus a pretty neutral PayPal.
All right, negative numbers here for Block. See if that anything comes out of that Hindenburg Research short report also. All right, Megan, thank you very much. Have a great weekend.
Thanks, guys. You too.
All right, Megan Brantley, the Vice President of Research